Hey everybody, Economic Ninja here. I hope you're having a great day. I am here once again with the most amazing Eric from Sage News. Eric, how you doing?
Hey, how's it going, buddy?
Awesome, man. So we're going to explain something because we had a great subscriber or follower comment, and they work in the trucking industry, and they said, I'm going to paraphrase with all due respect, you guys might have something wrong. The trucking industry is killing it right now. We have never been more busy and making more money, and they were saying it in a good way. So I think there's a little bit, we're going to take a step back and explain some things, right, Eric?
Yeah, and he's absolutely right. 100% from his point of view. The trucking right now is absolutely killing it. I mean, these are the highest markets we've ever seen in all of trucking. But like I say, there's a problem with that, because if somebody's killing it, somebody's getting killed. So the issue that we're kind of having is that although the truck drivers are booming in the money, shippers are not. And they're kind of at the point now where they're used to other numbers and they're hitting these high numbers. And that's kind of the situation that we're kind of looking down on from that, bird's eye view.
Yeah, absolutely. So we're actually trying to warn two different segments of the population. The shippers are going to start running into some very serious issue when they're trying to ship their goods, and they haven't budgeted for those massively enormous shipping costs that we've seen explode for the last year and a half, 2 years. The other side of the coin is the trucking companies that are putting out their invoices to be paid for the moving of the goods. Right now, we're starting to see invoices getting paid a little slower. Right. They're getting stretched out farther. And I think they're not seeing the bigger picture. And even though some companies are really on top of their invoices, a lot of mom and pop operations, or let's say up to 10 truck operations, they're not always watching the invoices being paid in a timely manner because they've been used to them being paid in a timely manner. And we're literally covering this right now, right, Eric?
Correct. And even those drivers at the smaller companies, they might be driving and somebody else is handling these invoices so they don't even see it until they're way past the due point. So I do have some screen shares if you want me to bring this in just to kind of give it a little bit of a reference.
Let's do it. And as you're saying, popping that up, I want everybody to understand my goal is to blow Sage News up on YouTube. Check them out, Sage News on YouTube. Again, remember, the Economic Ninja's mission is to make you guys more successful than I am, which shouldn't be hard. So let's do this. All right, go ahead, Eric.
All right. So what we're looking at here is this is spot market freight, and it's the 7-day average. And, the normal reign of freight would be somewhere around in between $2 and $2.50 a mile, $2.25 a mile. So if you're a shipper and you're looking to pay this, you're normally used to be budgeting around this area. Well, the going rate just recently is up at $3.50, $3.75 area sometimes. That's a lot of money to be different, a big difference in money when you're budgeting to ship your goods. And this is where they can't really, it's difficult for them to absorb those costs. Since when they're used to $2.25 a mile.
Eric, can I jump in real quick? Let's go back to that. What do you know of why it dropped so drastically in May?
This would be May of 2020, and this would be, I believe is this when we had a shutdown here?
Yes, yeah, that's what I wanted you to bring up. So everyone to understand why things don't always go up, but over the long term right now, especially with inflation, we're seeing and supply chain issues, we're seeing a long-term trend to the upside. But that May is when the economy was forced to shut down. So obviously you saw rock bottom prices for shipping because very few trucks were operating at that time and people just weren't shipping their goods.
Right. There was no volume to ship. So prices, supply and demand, freight prices go down.
Yep. All right, perfect. So I just wanted to touch on that.
Yep. And then the next one I have here is what everybody's talking about. Let me bump it up, is containers. And this right here is the China to West Coast container, and you kind of see China to West Coast. And what I want to kind of explain was you can kind of see back here, October, it was 1,300 last year of 2019, 2020 was 3,000. Kind of bring that up into today in this area. This is September. If you're budgeting for $3,700 to ship one container and you get a bill of $20,586 today, that's a big jump in a year. And it causes a lot of strain on budgets when shippers are trying to consistently say at a budget price to be able to make their widgets and be able to be profitable.
Yeah, and let me point out something, everybody. When you see this chart, when shippers are packaging their goods, they're obviously trying to stay competitive with other people in the same industry. So they don't, if you see how fast this started right around the $10,000 mark per container, put it up to the $10,000 mark, go a little bit more. No, right down a little bit. Get
There.
the date. So that was 16 July. So halfway through July, get me to the first peak. That was around 18,000. So from the middle of July to the end of July, we saw a difference of almost double the cost of shipping a container. That is absolutely catastrophic for a shipping, someone trying to ship their goods across the world, because they are literally completely taken us, it's like lambasted, for lack of better reasons. I don't even know if that's a real word, but it's absolutely smack in the face. So this is going to cause a lot of strain on companies trying to move their goods. Now, with the other side, Eric, let's go back to the 2008 fuel crisis, when diesel hit like between $5 and $5.50 in California. Right now we're seeing the national average of fuel starting to really rise. And even though trucking industries are crushing it on the per mile, isn't part of that because of not only a lack of drivers, but the cost of fuel?
Yeah, absolutely. And these are the drivers. The biggest expenses to drivers is going to be your salary you're paying a driver and your fuel cost. If either of those go up, that's your biggest, expenses that you have. Those are your inconsistent things that you have to pay. You don't know what fuel is going to cost because it goes up and down. Labor is all based on how many miles it drives. And businesses are built on consistency. They're destroyed on lack of consistency. So in the trucking industry, the more consistency you have, the better you are. So as fuel starts to pop up, and hang on. Just as you said that, let me see if I can, here's fuel.
Okay, perfect.
Segue to fuel. Nice. So what this red line is this red line is the retail price of fuel. I'm sorry, this is not the retail. The green line is the retail. The red line is what the base is for fuel, what the people are selling the fuel. And then up here at the top of this blue, this is what the stores are selling the fuel for.
Okay.
So you can kind of see that it's just slowly going up and up and up and up. And to a point that, as you can start to hear, that we're going to be having shortages on fuel and everything else, this could continue to go up to who knows where.
Yeah, so let me jump in and explain to people what happened in 2008 was pretty interesting, because fuel just skyrocketed. Barrel of oil started around $50 when that upcycle started, and ended up, I think, peaking at $127 or $137 a barrel. And in California, the price of diesel hit an all-time high, from what I remember, of around $5.49, something like that. And semi-trucks started pulling off the road because they literally could not do business with those high prices. It completely crushed the trucking industry back then. Now, where we have something really interesting, because we have such a lack of drivers and available rigs right now, because trucks are breaking down, we have a supply chain issue, that, a lot of truckers are like super stoked. Yeah, I'm getting tons per mile. The problem is, what you're not seeing is one thing that's about to smack everybody in the face. And I believe it's going to be a whipsaw event for the economy. We just covered how suppliers are shipping their goods at an incredibly high inflated shipping price per container. What happens if all those companies start closing up their operations because they cannot sell their goods, or they cannot raise the prices fast enough, or all of a sudden people said, the heck with it, I'm not going to buy your widget at that crazy price, and they have to close down? That means there's less freight eventually for this trucker to move. And that's what I think people aren't ready for, right, Eric?
Absolutely. And it's one of those things that a shipper has to stay competitive with the other people that they're competing against. And once they can't stay competitive, doors close, because I can't, compete with the next person. And I think that's the other thing too. And this is where that slow pay comes in, because of these fluctuations in regards to shipping and costs for them. I just recently had 2 shippers asked to pay by credit card. Now, my invoices are large because I do overdimensional freight. One was $9,000, one was $15,000. And when they called me, I said, hey, there's a 5% fee that you're going to be charged for that, using that credit card. I'll have to charge that. And they still did it. Yeah. Me, that kind of says cash flow problem.
Yeah. So what I want you guys to understand is, me and Eric are bringing you stuff that is happening in real time. This is like, when Bear Stearns went down in real time, and I was running around telling everybody, oh my gosh, the market's collapsing. And they just looked at me like, you're nuts. And I'm going, okay, what we're doing is we're bringing this slow train wreck in real time. And even though trucking costs are at all-time high and the truckers are killing it, we're explaining right now, the consumers being affected, the companies that are making these things for sale are being affected, And if they go out of business, the truckers are about to be affected. This is stuff that we're showing you in real time. And when companies start using credit cards and paying an additional 5% to keep their operations going, you know that there's smoke, and where there's smoke, there's fire.
Right. And all we're trying to do is get everybody ahead of the game, get you out in the front of this so you can kind of be observant to this. And so you can do what you need to do to better protect your business.
Yeah. I mean, honestly, the greatest reward that could come from all of this stuff is meeting company owners that own trucking companies, shippers, all that stuff. They come to us and go, thank you. We saw you guys reporting on this stuff. We did something with our company policies to move to avoid catastrophe in our company.
Absolutely. Absolutely.
Well, right on. We're going to keep this short. I thank you so much, Eric. Guys, go and check out Eric Sage News on YouTube. Eric, you're awesome, man. Thanks again.
Thank you. Thank you so much.
All right, man. With that being said, the Economic Ninja is out.